The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Of course, tomorrow's a holiday, so I want to wish you all a happy Easter, and we'll see what happens at the end of the day going into Monday. It's kind of an important period right now. You can see the charts I'm showing right now. The Dow's down 8, the S&P's down. No, I think I'm going to go to the futures. The E-minis are down 9 at 2019. This is a peak F-top, I believe. So far, that's what I'm thinking. But it needs to close below the 9-period exponential moving average, and quite decisively. In other words, it needs to close below 2022. And it's below it now, but that's just intraday. Look at the 120-minute chart. Made a beautiful arch formation. Hit trend line supports. Stochastic started rallying. The MACD's flattening out. On-balance volumes held quite nicely. But what's really important is that 9-period moving average at 2022, again at 2022 level, is going to be very important. This is the 120-minute chart. So a close on any 120-minute chart above 2023, give it a little room, would say, oh, okay, maybe we're going to go to the next level of resistance, and that'll be 2025. I did Larry Pesavento's show earlier on at 9 o'clock today, and in that particular period, we were looking at the charts, and what I'd said is, let me just go to this, move it over. I'd gone to the 10-minute chart, and I said the 10-minute chart made a trough F. There could be a rally, but there's support close by, and if there is a rally, what we need to see is how do the E-minis treat the 2018.75 high of 20 past 8 Eastern time this morning? And if it breaks and closes above that, the next level of resistance would be 2020.50, the high of 7 o'clock. Well, it's done that. Now it's consolidating this recent big spike up. And I've got a price time match which says that if it takes out the 20, if it goes above 20, 29, 25, then there's a real good chance that the candle that at 4:30 this morning, that high has a high of 225.50 and could become a target, and that would be by 22-1 this afternoon. I think there are two fighting patterns right now. There's the cup formation and the arch formation. And all we need to see is a close below 2017 in the next 30 to 40 minutes. That'll say, the daily chart is the one that we're looking at, and that's suggesting that we've made some kind of a top here, even if it's just short term, but it's going to take a little while to get back to 2047.50. But if we take out the 2010 level at any point between now and Sunday evening, watch out, 1989 would be the next stop. All right, so I've got that out the way. A couple of things I want to do. I want to just run the charts as I say them, because it is the end of the week, and today gives you the weekly close. So let's do this. The Dow has made a peak F-top at 17,000 right here, 17,648. Let me just change this because it's I didn't change it here. I changed it in other places. Edit 17,648. Get rid of the rest of it out there, and there it is. So I'm calling it a peak F-top, and the chart I showed to my subscribers on my opening call every day, this one here, I've called it an F/D. There's a lot of evidence that it's probably an F, but I need to give it a little bit of time. And as I've said before, we are short the Dow. Nice little bit of a gain, but this is nothing really. What you really want to see is a close below 17,400 in the Dow to suggest that the stochastic will go under 80% early next week, and the MACD will turn down. As it stands right now, there's still enough internal strength to say, be careful. So we had a couple of things going on here. We did make a leg D. Whenever we make a leg D in the VIX index 120-minute chart, you got to be careful. There's a real good chance you're going to start to move to the upside in the market, just even if it's a relief rally. So I'm watching this closely. The A16.44 was hit in the VIX index this morning. Now it's way down at 1541. It's only up 47 cents. And that trend line, the 120-minute chart, oops, I didn't mean to do that. The trend line support over there has been touched. So there's a little bit of a bounce. Now the Dow's only down 42. The volatility index again gave me information that said within 2 days, there should be a move of 9, maybe even 11 points in the E-mini futures that should help the cash index as well. Look at this. I forgot to tell you. We've already done that. We went from the low. Yeah, this indicator has had just a fantastic success rate, 98%, something like that. Look, we were down at 2012.25 at 20 to 10 this morning. We just made a high moments ago of 2021. I would say that that's 9 points right there. So it succeeded in doing what it is. What happens is that it gives you that reflex action. Then you've got to be careful because you could start to pull back again. That's really what you have to be watching for. Now, yeah, that's not for me. Okay, next thing is what we're looking at here in the Dow, I'll give you the parameters. A close today or Monday above around about 17,550, that's only 100 points up from here, would be a big positive. Now, this is what I was looking at, and this is what I showed my subscribers. This is what we've been talking about for about a week now. This pattern here in the Dow, where you're looking at the weekly chart that went from the low of right there, 15,370 on the 24th of August. And then it rallied and it stalled right here at 17,977. This is exactly the pattern we're matching right now. And it's one of the reasons why I said I think there's going to be resistance. I don't know if this is just a short-term top or the short-term top that's going to take us down much deeper to test the 17,000 weekly 9-period moving average of 17,000. I just don't know that yet, but I prepared for it. And I had our subscribers prepare for it. And we've got out of quite a few positions trying to build up a cash. I'd rather be building up a cash situation right now. Let me just check one thing. Yep, there was a rally. Did it get to my level? Oh, just missed it. Sometimes I set the levels and they are so specific that we might miss by just a fraction like we did today in shorting something. No, that's okay. There's still plenty of others. There are 5,000 stocks or more that we can look at. So here we go. S&P, SPX. Let me get this done before the break. The S&P is down 7 at 2,029. It's just under the 9-period moving average, and that moving average is at the S&P is at about 2032. We're at 2029. It's a weekly chart that I'm looking at because the stochastics at 73%. It's good. MACD is expanding, but we're going to see if the daily becomes the rudder to drag it lower. In the meantime, back at the ranch, the resistance would be if there's a break into the 2039, 2041 area in the S&P by Monday or Tuesday. I'll just have to admit we're going to have to wait a little bit longer into mid-April, early April, before we get an actual serious turn. So the rest of it is the comp index is down 3 at 47.69. Now gold's very interesting. Gold is only down 2 at 12.21. Talk a little more later. Silver's down 2 cents. Crude oil is down 97 at 38.83. And bonds are down 7.30 seconds. And the dollar's up. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back, and Dow's down 59, S&P's down 8. A couple of questions I had. Let me go into the dollar because this is going to be quite important. What was the, I just had an email. Fed president talking about Fed hikes. Yikes. Can you analyze the chart of the DX, of the dollar, of the DX, of the dollar? Oh, and the UUP. Okay, yeah, dollar. Here we go. So the dollar right now is rounding. It's at 96.25. It's up 21 cents. My thinking here, let me just go to this 120-minute chart. This is the continuous contract. Yeah, I needed to look at the shorter term because this has just been a beautifully steady move. I love these. I call them, this is a snail crawl. It's like a worm. I remember years ago, I'm talking really years ago, I think it was Merck. Merck had this pattern in a chart. And I thought that looks so interesting. It's climbing the 9-period moving average. It's like walking on a tree, on a tree branch, and then all of a sudden A, B, C, D, E, and then all of 1, 2, 3. All of a sudden, the branch breaks. That's what often happens with this. It looks fantastic, steady, 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 and then there's this one move that suddenly comes down, and it looks a little bit like that. I'm not saying it's going to be. I'm just saying this is a pattern that I was always intrigued with because it's one of those patterns where every single bar you say, oh, it should pull back, it should pull back, and it just keeps walking the 9-period moving average. And finally, when you say, I've had it, I'm going to get in, kaplop, it comes down, and it comes down a little bit like this. Now, I just want to explain it for a moment because this is the dollar, and what we're looking at here, and I must make that light, transparent. Okay, that gray, let me see if you can see. Yes, you can see it. Okay, that grayish bar right there, where the 200-period moving average is right where it's stalling, the 9-period moving average is exactly where it's holding. What sometimes happens is there's just one little blip, and it goes kaplop, and it takes out many bars on the left side. In this case, it would take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, somewhere around the 14th, 15th, 16th, 17th bars is where it would be if there was just a sudden drop in the dollar. Now, I'm just putting that out as a chart pattern. So now I'm keeping that in mind. So now I'll take this away because we're in E with a plus sign, that's the doji there. on the 200-period moving average. So two things you have to keep in mind. I did Larry's show earlier on. I didn't make a big deal too much about the moving averages because most of the people that listen to Larry look for other things that Larry looks for. Everyone has their own techniques. Look at the power of this 200-period moving average. Couldn't break above it. Kept falling all the way from the 10th of March. Tried. And then it came down to around about the 96, 95 something, 95, 94 level. And then it ran up slowly. Peak A, peak B, peak C, peak D, peak E. And then little doji candle on the line, plop. There it is. That's exactly what I was talking about. Just crawls along the 9-period exponential moving average. There's a difference to crawling and skipping, because skipping means that you might sometimes not even touch that, but have lovely moves to the upside. This one is really using the escalator, the steps, as a base. And then kaplop, you get that candle. Doesn't mean to say you've got to keep going down, but there is that sudden kaplop when you've run out of the MACD's moving average, faster moving average, being green, the green line crossing the red line. And in this case, you got almost the same double top M-shaped pattern in the 120-minute chart of the dollar. But look at this. You've got your pullback. You've got your slight move to the negative side here in the dollar technicals, and yet the dollar is holding up. And I always say price is the arbiter of a trend. You can look at technicals until you're blue in the face or red and green in the face. If the price doesn't do what the technicals are saying, it's showing relative strength or relative weakness. And that's really important. Why is it important? Because I'm going to suggest to you that the price is what people are prepared to pay. And therefore, it has a nuance and it has a life of its own. Whereas the technicals are saying, I always think of this. I'm not going to make it personal, so I'll make it a generalization. I always say I'll look at the X-ray, the MRI and the X-ray of the patient. The X-ray does one thing, MRI is much deeper and does a different thing. So I know people who've had a medical test, very good medical test. I know people who've even had a stress test and done really well, and within a week or two later, bam, heart attack or something like that. So sometimes you can pick up all these little details, and sometimes you can't. There are other times where you're looking at the technicals, you're looking at the innards, and you say, this guy's been smoking for 40 years. He's now 82 years old. He's as spry as anybody, walking around as if, you have that. It's genetic as well. So you look at the chart and you say, no, what are you doing right now? And right now the dollar is holding the 9-period exponential moving average at 96.20. If it closes under the low of 96.30, I'm sorry. It's the low is 96. Oh, the low is 96.17. If it closes under the low, why would that? 96.17. Yes, there you go. If it closes under 96.16, a little later today, you could see the dollar test the low of earlier today of 96.04. But in the meantime, it is hugging. Oh, yeah, this is my point was going to be this. When it takes you so long to get out of the way. Oh, Tim, I did forget about Tim. Tim, I'm so sorry. I saw you there and I was going to talk about you and then I got carried away with the dollar. I'll get back to the dollar. I want to be with you, Tim. Tim, how are you?
Hey, thanks, Basil. I'm doing great. How are you doing?
Well, except for the fact that I got a little carried away there and forgot to look down at my prompter. I'm fine. So, hope I didn't take too long with you waiting there patiently in the background. You'd like to look at?
Well, I'm kind of curious on the IBB. I think you covered it earlier this morning, but I couldn't listen to the whole thing on it.
Yes.
The IBB, okay. And I don't know, I don't like the area it is right now to short it. I really don't like it to go long right now, so I'm trying to figure out what to do here.
Okay, so now this is it's a great follow-up question to what we had. Gator had called me earlier, for someone in the den had called me and asked me about the IBB, but actually his question was about the BIS, which is obviously something you would look at if I was suggesting going short rather than long, because the BIS is 2 times long the IBB, which is the iShares Nasdaq Biotech ETF. So I said to him that you've got to be a little bit careful buying it here because the BIS was up near its highs, near the 47.72. It opened at 46.55, so it was closer to the highs. And what it says, I'd be a little careful. I would nibble here because it looks like the IBB doesn't want to come down, but at the same time, the best opportunity was in my newsletter yesterday. I had said, we're now looking at not the BIB 2 times long, but we're looking at the 2 times short. And this could be the time to get in. And I did not get in. And we missed a great opportunity to go from the 46s to today's high of 47.72. So now we've got a little bit of a break. And I'll tell you what I'm going to do. I want to do a little bit of analysis in the 120 and the 10-minute during the break so that when we get back, I can give you very specifically what I'd be looking at. Do you mind holding?
Yeah, do you mind if I hang up and listen, Basil?
Okay.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Tim in Denver, and we're looking at the IBB. So now, is your... Oh, I forgot to ask. Actually, I'm just going to do the analysis. I was going to ask you, is your bias to buy it or to short it? And from the conversation, my thinking was, since you said IBB, that you were looking to see if it was a buy to form maybe that second H pattern. So it's an M pattern, lowercase m. But this is my analysis. Based on the 120-minute chart, short term, there's a very wide bar. And if the IBB is able to go above 259.19, that'll be very positive and suggest that it can go all the way back to the high that was made yesterday of 263.97, because it is one of the sectors that is most oversold. And therefore, I'm thinking, and I've been discussing this for a little while now, that the pattern in the daily is to hold the 240 to 241 area and possibly rally, and rally making an H pattern. I even drew it in right there. So this is mine. That's the reason why I said to Gator earlier on when we were looking at the BIS that I would only nibble. There were certain parameters that you want to look at. My ideal, I said, was to get the BIS between 44 and 43. Now I'm looking at the 200-period moving average of the weekly chart, and this is what I'm going to say, Tim. Tim, I don't want to give two different opinions, one for the short side and one for the long side, because it's right in the middle of a trading band. And I would say to you, I would prefer, if you're going to look at the IBB for a bit, the best risk reward is to be looking at it closer to the 245-ish area, 245 to 243. That's where I would suggest buying, with a stop of maybe, since it's a $255 stock, with a stop of even 5 points just initially, because as soon as it works, it should break back and get to the 255 area, 256. And then you can immediately put in a much tighter stop. So I'm going to make the suggestion that I think the downside is limited for now. And that if you're interested in the IBB, that if you want, and I know that you're not on, you're just listening right now, I'm going to make the suggestion that since there's a greater chance now that the IBB will become, I wouldn't call it a favored group, but it will be a little bit more selectively in the portfolio manager's minds, because it's been holding support and it's just been hammered from 400 down to the 240 level, that it could have more of a bounce to the upside, going from 255 to maybe the 268, 270 area over the next 3 weeks, than to break under 240. But that's 14 points down, 14 or 15, some 16 points up. I'm really stuck telling you what to do, because I don't think this is, wow, this is a tough one. Yes, I think I know what I'm going to do. Because the IBB is the one that has the potential to hold support better than the others, I'm going to make the suggestion that if you're interested, buy a small portion of the IBB at 255.89 right now. Because it's a small portion, I'm going to suggest just until Tuesday, put in a 5-point stop. And that way, if it holds really well on the next pullback in the market, which I think is coming, and it holds 253 and then bounces back to 255 by Tuesday or Wednesday, you're looking at something that's saying to you, I might not go up very far, but I've got a lot of support on the downside. I can keep trading to the upside and take my profits and keep coming back out. And when it gets, if it does, get to that high of 265, 268, then I'll start saying, hey, maybe now's the time to short again. So that's what I'm thinking. To tell you the truth, at this point, at 256.03, if it was me, I would just step aside. I want more evidence. I don't want to just play for 6 points on a $256 stock, either up or down. I really want something more. So that's the way I'm looking at it. If you're trading something like the BIS, which is a lot less expensive, it's at 45, then you've got a little bit more leeway. But even that, I'm suggesting I would prefer to look at it again at 44 to 43, and somewhere around there. And that's probably the place that's going to give you the most information. I hope that helps you. So actually, I don't think I was a help, but I tried my best. Let's go to Joe in Boston. Joe, how are you?
Very well, Basil. How are you?
I'm very well, thank you.
Yeah, I wanted to look at silver. I called you, I think, a week or so ago. I had an initial position that I got in about a month ago around 1440, the SLV.
Yep.
And I think, I was going to, it was like a third of what I wanted to buy. I wanted to, buy some additional. So it ran up to 1525 or so, and now it's pulled back. And I'm thinking, wanted to know what you thought here. It looks like, 1450. The 50-day moving average is just crossing above the 200. This looks like it might be a good point to add, but I'm not sure.
So, and the other thing, if I remember correctly, I said kind of keep it as a starter position because we need to see how it holds in the next big pullback. Now we're getting that pullback. And I also said to you, I think it should make a leg C to the upside, which it did, but it's failed twice it's failed at a peak C and gone to lower lows. This time, the MACD is much better than the stochastics at 75. I think you got your eye on the right area. Timing-wise, I'm going to have to suggest that you hold off a little bit. I think it's at 1450 right now, down 0.01. Not bad. But the way the chart has made this double top, I would not be surprised to see it test 1425. And in my work, that is I believe that's the 200 period simple moving. Yep, the simple moving average. And that's the level that's going to be important because if it closes under that, you might expect to test the 1397 low of 226. That's on the negative side. Now, I have to give you the other side as well. If I'm wrong that it's not going to be coming down, then what you want to be looking for is on Sunday night. I don't know if you ever follow the market, but on Sunday night, if gold is actually up, gold now I'm talking about, it should help silver a little bit. But most importantly, on Monday, when we get back to work, I want to see what happens because if silver turns this 200 period moving average, see on my work, this is the 200 period moving average right here at 1450, it's at 1448, just a tad under it. If this becomes not a propellant for the downside, but it's trying to make it a base of support, let me open this up for people who are looking at the charts who want to see a bigger chart. There we go. I wanted to show this because it had the potential for a cup and a handle. In fact, I think we even mentioned it the last time. Now it's gone just above that left side lip of 1520, but it never went all the way to 1560. Let me put that in corrected. 1560, the high that was made back in October. So I'm thinking here that it's making a pattern that's really a big consolidation, and I would love to see it pull back. And then I also am going to be looking at gold and silver at that stage early next week to see, is it holding? Or is the dollar going to be even stronger and gold is going to be pulling back even further? I know that Steve Rhodes made a nice call talking about gold going a little deeper to the downside. I'm looking at this and I'm saying the failure yesterday and today is a little deeper in leg C in the weekly chart than I really would like to look, but it's at right on the 9-period moving average. So do you mind? I'm going to say to you, Joe, hold it for a little longer because silver's the lagging commodity. And I think that we'll have a much better feel around about Tuesday of next week, Monday or Tuesday of next week. Okay,
All right,
Joe?
perfect. I'll check back in with you next week.
Thank you very much. We'll
Bye-bye.
be back, folks, as well. Dow's down 67. Basil Chapman, Target Conditions. I'll talk about my webinar coming up on Wednesday night.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, before I run out of time, I can't remember if I did it this time. I hope I did. But I just want to wish everyone a happy Easter. Just have a wonderful time. And it's a long weekend, and we'll be back Monday ready for all these markets. So here we go. This is the 10-minute. Remember I said to you, I cannot rule out the arch formation here in the E-mini 10-minute, and look, it's pulling back. There are a bunch of things going on here that I believe, again, at the close today in the weekly charts, going to give us tremendous information. So let me do this. I want you to look at the HYG because a good question came up. HYG High Yield Fund, seeing big put buying. This was the canary in the coal mine in 2015 before the 2016 January-February S&P sell-off. Correct. Now, reason why I immediately picked up on it, and I would have forgotten, I do, thank you, Sarah, I would have completely forgotten about it. I was going to look at it about 4 or 5 days ago and just completely forgot. When did I put the notation in? Just a little more than that. I had a peak D. So HYG, I'm going to make a note right here, HYG with a question mark. I'm going to be dealing with this on my webinar coming up on Wednesday night, and I'll talk about it in a moment. Not a Merry Christmas. That was a mistake, of course. It was Easter. So Good Friday. Oh, I had an incident once upon a time with Good Friday. I'll never forget it. But anyway, let's go to the HYG. iShares, iBox, high yield. So this is really a corporate bond ETF, and you've got to coincide with the Dow, and this is just another confirmation that we really have to respect the little top that was made the other day, because here again, you made a turnaround at a peak F. The MACD is finally turning down after being absolutely fantastic. And when it's had this very large move like that, it often goes to a G, an F or a G, not a D, but it turns down. So now it's turned down. It's under the 9-period moving average. The stochastic's under 80%, so I have to put a down arrow. Could be wrong, could have another spike to the upside, that rogue wave that I was talking about when I did Larry's show. But this is hinting that 200-period exponential moving average, while it should be a magnet, has suddenly pulled away again. And look, it has not even been close to the 200-period moving average since April of last year, February of last year, but it broke below it. Whoa, it really broke below it. The last time was back in about August or September of 2014. Look at that orange line, that coral color. So this is just saying to me, it has been a tremendous struggle. You've had all the technicals improve, and yet it couldn't have a decent enough rally to break above. I've got to keep my eye on this high yield fund. Now, if that's the case, then what we've got to be looking at is if there is a chance, and this is really going to be the canary in the coal mine, good expression there. Is there a chance? Oh, I should do that now. Let me get out of this And this is Chapman Wave projections. Close workspace. Let me do this right now. Oh, good. We've got two segments. So in the middle of this second to last, I want to go here to show you something recently. Okay, long-term charts. And while this chart is coming up, let me just sum up, because I was asked about it in my opening call for my subscribers. And we are short the Dow. We are along a sentiment indicator. We are along a telephone company, and we have half left. We've taken a little bit off the half, but basically it's almost a half, and it's held beautifully. It's had a fantastic gain, and it's got the dividend. Will we be able to keep it through the next dividend? I hope so. We'll see. Sometime in April. We are still short from way at the top on the IBB. We have other positions, and the copper position is still holding. It's got like a 45% gain. If it gets stopped out, it's 45 at this point. It's a little bit more in percentage terms. I think it's going to get stopped out, but copper's done nicely. I think I'm watching it closely. We got stopped out of our commodity index. In a way, I'm sorry, because we got in so nicely. And another way, I really feel at this point, I want to garner as much capital as possible to be able to get this next downturn, because this might not be the bigger downturn. This might be just the starter. But there are a bunch of things that I'm going to talk about on Wednesday night. If you aren't an opening call subscriber, you certainly can be involved. Let me just show you. Actually, this is a stock we were talking about. That's not the issue. The issue right now is to go right here. So if you go to the front page of TFNN, right here you'll see the opening call subscriber event only. Right here, the coming 3-month outlook in the market and which sectors could rally or fail. The reason why I think it's not even 3 months, it's even less, but the next period is going to be so important is because you have many people, really fabulous technicians, who are talking about a smash to the downside. I'm not yet talking about a smash to the downside, not yet. I think there's another big phase to come. I don't know where it can come from. I don't even know how it can come. But I'm going to show you all the aspects that I'm looking at. Whoops, what did I just do? Back. I want to go right there. So it's the coming 3 months outlook. I'm going to be talking about the socioeconomic. I'm going to talk about politics. I'm going to be talking about icons. I'm going to be talking about skyscrapers. I'm going to be talking about the dollar, bonds, gold, commodities. Where are we? It's an hour and a half. Usually we just have an hour. I've got an hour and a half, and it's going to cover a tremendous. The way I've been going through it is I'm trying to be as specific as possible. I'm going to be talking about real estate. There's a surprise there that you won't believe when I talk about real estate. And just innumerable aspects that are going into the mega outlook for the market. And that mega outlook for me involves the late 1920s, the close of the 1920s, the cars, etc. of the 1920s. What's the relationship? Let me just get out of this, etc. So I really think it's going to be fascinating and very informative. And we'll have stocks that are going to coincide with whatever we're looking at, like we always do when I have my webinars. And it's followed up. You get 30 days free if you aren't a subscriber. It's really a fabulous opportunity to just investigate. You don't have to do a single trade. You could just get it for 30 days. You'll see how I give every single day. You know exactly what we're looking at based on the Chapman Wave, based on the quintuple segments here of the overview and today's market and market today, and then the Dow chart that tells you just look how much information there is here with the MACD, with the cup formation, left side, right side, price time match went exactly to the day, right there, bam. So we're looking at many things that are really important at this point, and the reason why Wednesday night is so great, because I'm going to be doing I'm going to look at the monthly charts. We've only got 1 day to go after that. We're going to get a tremendous amount of information from those monthly charts, the candles of the monthly charts. So here we are. So the HYG says to me that there's a good chance we should be pulling back here. It's at 81.30, down 41 cents. But essentially what we're looking at is a close below 80. 80.51 is the 9-period moving average. Give it a little room. A close between below 80 is just too deep a pullback. And it says, hey, you're going to take a little while longer. So that's what I'm looking at in terms of high-grade yield. And now, as soon as we get back, I'm going to give a wrap-up for what you can look at over the weekend, and I will send it to subscribers a whole bunch of information and charts. Starting probably on Friday, I'll send some charts out for to have a look at them.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget your swimming lesson, and today is Thursday. Thursday means we go right through. We had a fabulous program with John Logan this morning. I did my best substitute. It's impossible to do. I did my best substitute for Larry Pesavento. Then, of course, you had Tom O'Brien and Tommy. Great show. Then I came in. This is the show right now. Dow's minus 70, S&P's down 10. And we're looking at the short side of the market, at least for now. And we've got Think or Swim. They talk about options, all fabulous strategies. You've got, straight after that, you've got Steve Rhodes. You've got, it says Steve, then it goes to Dave White. And then you've got Tom O'Brien back again for 2 hours. And then you've got Andy Hecht. This is a perfect time for Andy to talk about the commodities. He's got a new article out, Seeking Alpha, today. It is his pick, in fact. He writes so well. Andy really is able to articulate his thoughts very well. So, okay, what we're looking at here, VNQ was a question. This is the Vanguard REIT. It's made a peak D. Is that a D? Am I going to use that as a phantom peak? 81.27, 81.28. Oh, I am going to use this as a phantom peak. I need to just double check. 68. 78. Yes, I'm calling this a phantom peak. It doesn't happen very often. Everything about it says if I don't do that, I'm going to miss the top. So I've got this as a peak D. It's gap down. I'd have to say it's real close to me putting a down arrow in. I'm going to do that right now. And that is the Vanguard REIT ETF at 80.45. Well, maybe the day's young, maybe. No, I can do that. And peak C in the weekly chart. I think there has to be a consolidation. By next week, if it closes under 79.50, 78.26 is the 200-period exponential moving average. A bounce to the 82.50s, 82.60s would say, hey, I can make a U-shaped double top to finally get that actual D. But in the meantime, that's what I'm putting. I'd be a little careful shorter term. All right, let's go on. So now what I'm looking at is this. You've got a weekend to look at it. I'll be going through the VIX index very carefully over the weekend, as I did last weekend. And what I was pointing out is that we've got a left side, right side price time match that works like this, right here, right there. And that it was 1 day late, 82.75. Yes, it was 1 day late in the match that I had. And that was to the exact pivot point. I love when you can use a plumb line of, in this case, the low of the 28th of October at 1280, the high of 32.09 on the 20th of January. And that's a plumb line at peak E, and it comes exactly down, and you made it to within 1 day at 13.75. Nice. And now we've got a leg A. But the day's young. Anything can happen, but it is over the 9-period moving average. The weekly chart is about to close, and the weekly chart says, hey, unless you can get to 17.50 to close above the 200-period moving average, this is not yet such a good sign. So it's just the data that's giving a hint of a turnaround. So you want to see by next week, you want to see the VIX in the 17 to 18 area as the market is pulling back. Dow's down at about, let's call it, goes down to 17,200s. S&P goes to 2010 to 2005. That will say, yes, we've got a little deeper correction coming in. But if there's a bounce today and the bounce says, hey, the VIX is going to pull back under 15.50, it's going to say, whoa, wait a minute. The Dow would then be only like minus 30. And the S&P would be minus 5 or 6. That'd be a nice action, but not good enough. My suggestion right now is you've got to be very careful. There are many signs that saying that we are ready for a pullback. That in the INDU, in the weekly chart, look what's happened. You stop dead right there. Let me show you this chart one more time. This is the chart, to me, is the most important chart, the weekly Dow chart, and we are stalling just like we did over there. If the Dow next week cannot get into the 17,750 to 17,800, but instead starts to go into the 17,200s, it's matching that decline right there. Hey, thanks for being here. I'll be back a little later on with Tom O'Brien. Have a great rest of the day, and happy Easter to everyone. Otherwise...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.